Let us discuss the new topic, residence and tax liability. First of all, we have to know what is the meaning of person. Here, person should be classified into two categories, a legal status. The second one is residential status. In the legal status, the first one is individual. Individual means male or female person. The second one is firm. The third one is companies, that is corporate entities. A fourth one is institution. Fifth one is local authorities. The sixth one is HUF, Hindu Undivided Family. Seventh one is Association of Person, that is AOP. Final one is BOI, Body of Individual. Residential status under section 6, subsection 1. After determining the legal status of an assessee under section 2, subsection 31, the residential status of an assessee is to be determined. Determination of previous year. Residential status is to be determined for every previous year. It depends on the number of the days a person who is staying in India in the concerned previous year. Previous year means which starts from 1st April and ends with 31st of March. Different terms of citizenship. An individual may be a citizen of Britain but is resident in India. In the same way, a citizen of India may be non-resident of India. Residential status is very important in deciding whether foreign income of a person is taxable or not. Tax incidence of an assessee depends on his residential status. For example, whether an income accrued to an individual outside India is taxable in India depends upon the residential status of an individual in India. Similarly, whether an income earned by a foreign nation in India or outside India is taxable in India depends on the residential status of an individual rather than on the citizenship. Therefore, the determination of residential status of a person is very significant in order to find out his tax liability. You know how to calculate the tax liability. There are 5 heads of income. The first income is income from salary. The second one is income from house property. Third one is income from business and profession. Fourth one is income from capital gain, and last one is income from other sources. If you sum up all the 5 heads of income, you will get gross total income. After deduction, you will find out net total income. As per the slab rate, you can find out the tax liability of an individual. Now, let us see the residential status should be classified into two categories. One is resident, another one is non-resident. In resident should be classified into two types. First one is ordinary resident, the second one is not an ordinary resident. There are 4 important points. 2 basic condition, another 2 point is additional condition. Basic condition, stay in India. A person who is stay in India 182 days or more during the previous year. Second one, minimum a person who is satisfied 60 days during the previous year and 365 days out of 4 years. Additional condition that will comes under section 6, subsection 6. A person who is in India, he is stay in India 2 years out of 10 years. And the last one, fourth one, he will be stay in India 730 days out of 7 years. Condition to be satisfied. Resident, if he is resident means he satisfies any one of the basic condition. If he is ordinary resident means he satisfies any one of the basic condition and both the additional conditions. Not an ordinary resident means he satisfy any one of the basic condition but does not satisfy one or none of the additional condition. If he is NRI, that is non-resident, does not satisfy any one of the basic condition. The residential status in nutshell. There are three columns we have to prepare here. Status, the second one is basic condition, and the third one is additional condition. If he is resident means he only satisfy basic condition. He couldn't satisfy additional conditions. If he is ordinary resident means he will be satisfy both the additional condition as well as both the basic condition. A person who is not an ordinary resident means he only satisfy basic condition, he couldn't satisfy the additional condition. If a person who is NRI means he couldn't satisfy basic condition, so we couldn't see directly additional condition. Residential status of HUF, that is Hindu Undivided Family. The residential status of HUF depends upon the control and management of its affairs. Resident HUF, if the control and management of the affairs of HUF is situated wholly or partly in India, then HUF is said to be resident in India. Non-resident HUF, if the control and management of the affairs of HUF is situated wholly outside India, then HUF is said to be a non-resident in India. Not ordinary resident HUF. A resident HUF is said to be not an ordinary resident in India if Karta or manager thereof satisfy any one of the additional condition under section 6 subsection 6. Residential status of the company. According to section 6 subsection 3, an Indian company is always resident in India. A foreign company will be resident in India if control or management of affair wholly situated in India. Residential status of firm or AOP, association of person. Residential status of a firm or AOP or other person depends upon control and management of affairs. Resident, if the control and the management of the affairs of the firm or AOP other than the person is situated wholly or partly in India, then such firm, AOP or other person is said to be a resident in India. Non-resident AOP. How to calculate the non-resident AOP? If the control and the management of the affair of the firm or AOP or other person is situated outside India, then such a firm, that is company or AOP or other person is said to be a non-resident in India. Incidence of tax. Scope of total income. The tax is levied which is imposed on the total income of the person. The total income is based upon the residential status of an assessee. The incidence of tax is highest on ordinary resident, little lower on not an ordinary resident, very lowest for NRI. The scope of the total income varies on the basis of the status. It will be changes according to status. Scope of the income is equal to Indian income plus foreign income. Let us see here what are all the Indian incomes. Indian income means income earned in India. Income accrues and arise in India. Income received or deemed to be received in India. Income is payable in India, such as income may have been earned in foreign country but it is payable in India. Income earned or accrued in India but it is received or payable outside India. What is the meaning of foreign income? Income earned or accrued outside India and also received outside India. Any income which is not earned or accrued or arises in India. Such thing is called foreign income. Scope of the income to resident. Ordinary resident is equal to Indian income plus foreign income. Not an ordinary resident is equal to Indian income plus one particular type of foreign income, such as business in foreign but controlled from India. NRI, that is non resident of India, is equal to Indian income only. Rules for determining the scope of total income and incidence of tax under section 5. Types of income, we have to we are giving four columns. Types of income: ordinary resident, not an ordinary resident, and the last one is non-resident. A person who is received the amount in India, whether he is earned in India or outside India, the all the three situation is taxable, taxable, taxable. If the person who is earned the income in India, which is received in foreign countries or Indian country, all the three situation is taxable. And come to the third point: amount received and earned outside India, being the business is controlled from India. In such a way, in this case, the two situation is taxable. Resident, ordinary resident is taxable. Resident but not an ordinary resident is taxable. If he is NRI means he couldn't pay the tax to the Indian government. Fourth point: amount earned and received outside India. Even the business is controlled from outside India. In this situation, only one situation is taxable, that is, if he is ordinary resident means paying the tax to the government of India. If he is not an ordinary resident means he couldn't pay the tax to the government of India. If he is NRI means he couldn't pay the tax to the government of India. Come to the fifth point: a person who is earned and received in the form of four important heads of income: income from salary, income from house property, income from capital gain, income from other sources. Only not from the business and profession. And the amount is remitted to India. At that situation, the first one is taxable, the second situation and third one is not taxable, not taxable. If you are coming to the fifth point is completed here, the sixth one is the amount is received and earned outside India and deposited there. After a long period, he is coming along with income during the previous year means he couldn't pay the tax to the government of India. If he is ordinary resident, if he is not an ordinary resident, or he is NRI, all the three situation it is not taxable. One more point is there: past untaxed foreign income. All the three situation he couldn't pay the tax to the government. I hope all the students understand the incidence of tax and tax liability in this class. Thank you guys. Thank you very much.